Hello, everyone, and welcome back for another episode of Trader Talks. This week, we're focusing on trading US PCE. Now, if you don't know what that is, you're about to. It's the Federal Reserve's favorite inflation gauge. So if it's good enough for them, you bet it's going to be good enough for us. Also, remember to like, share, subscribe all of these episodes. And remember to let us know if you want us to cover anything in particular. That could be an earnings report. That could be a central bank meeting or any data release in particular. Speaking of inflation, I did want to just mention this. I was speaking with our global market strategist, Ben Laidler, recently, and he was saying US inflation is the biggest number in markets. It's driving the Fed rate cycle, the macro, earnings, and recession risks. So that means we need to focus on it. It is all about inflation at the moment. And also, did you know, a little stat for you all there, that over the last 12 months, the average price swing on CPI day for the S&P 500 is 1.9%. That means we're getting volatility. That means there's opportunities out there. So today we're going to focus on how we can take advantage of that, how professional traders will prepare and what markets could move and why they might move. But before we get to that, let's actually focus on what is PCE. In the United States, the Personal Consumption Expenditure Price Index provides a measure of the prices paid for the domestic purchases of goods and services. Now, do remember, if you are listening on a podcast, while I will cover everything that you would see anyway, you can click the link below to check out the YouTube, just in case you wanted to see any of the slides. Now, we mentioned the Fed earlier, and we said that it's their favored inflation gauge. Now, you might be thinking, well, surely this is what's going to move markets the most compared to the CPI. Well, the CPI comes first in the month, and there's actually very little different to the actual inflation reading. So usually it just provides a little bit of extra detail, the PCE. If it was the other way around, I'm sure the PCE would actually move markets more. But remember, the Fed are data dependent, and markets are now looking for direction after the relief rally we've had and how we've just started to drift a little bit lower. So it's going to be a really interesting data release. If it shows us anything that we don't already know, markets are going to be primed for some sort of movement. Also, for us to focus on is going to be the affected markets. Before any data release, we really have to go in prepared as possible. As a trader, I need to know what markets are going to move, what the correlations are going to be, and also technically which market might suit me better. Okay, so first things first, it's a US data release. That means the currency that's at play here is going to be anything to do with the US dollar. So I'm sure many of you know, but the most traded currency pair out there, and therefore the most liquid, is going to be the Euro USD. For me personally, this is something that I would be looking to trade, or the pound against the US dollar, or dollar yen, for example, those currency pairs that have the most liquidity. So in times of volatility, you're still going to be able to get in and out at a price that you pretty much want. Also, the stock market is likely to be affected, whether this is a good, bad, or inline data release. So for the US stock markets, we're talking about the S&P 500, the NASDAQ, the Dow Jones, the Russell. These markets, when this data release comes out, are likely to be affected, as is the bond market. So the US 10-year government bond is likely to move at this moment as well. And also commodities that are priced in dollars like gold and to some extent oil will also move on this data release, and sometimes crypto can as well, depending on how strong or weak the US dollar is. Now, let's just say we get a really good inflationary reading. And by that, at the moment, we mean a little bit lower than expected. This would deem to be good for markets. Stocks would go up, gold would go up as the dollar would weaken, and bonds would follow suit in a monetary policy type reaction, rather than risk on, risk off, where safe havens go up and riskier assets go down. Monetary policy, certainly in the US at the moment, we're likely to see stocks and bonds move the same direction. If it's worse than expected, well, cross your fingers, unless you're a bear, because the market is likely to go down. Now, that brings us on to the actual data expectations. Now, this is something that's very important. Remember, going into any data release, we need to know what is priced in. Now, the street expects core PCE to rise 0.3% month on month in January, which matches the pace seen in December, while the annual rate is likely to be unchanged at 4.4% year over year. Now, this data will be read in the context after the hot CPI and PPI data for the month of January, which demonstrates that the road to normalizing inflation will not be so linear. Now, also, it is worth mentioning going into this report and thinking ahead, we also had a strong January jobs report. Services ISM was good, along, as I just mentioned, with the PPI and CPI data. That's all contributed to concerns about these next inflation releases. And as a result of that, we've seen the federal funds rate has repriced in a bit of a hawkish manner, which you could argue is the reason why markets have come under pressure in the last few days at the time of recording. So markets now see the terminal rate at 5.25 to 5.5% versus 5 to 5.25% before those January CPI releases. Okay, so some analysts, and I've got a couple of quotes for you all here, have said core CPI continued to moderate in January, but much of the weakness was driven by components that don't impact PCE estimates. Meanwhile, PPI inflation surprised on the upside, including a pickup in healthcare, air fees, and financial services, all categories which pass through directly into PCE calculations. So just on those expectations, just remember, going into any data release, you want to know what time of the day is the event coming out. I don't really want to be holding trades in the build up to that. And then for the bigger moves that happen will be when we break out of the expected figure, whether it's a lot higher or a lot lower. Is it the highest it's been in 6 months or the lowest? What's the recent trend of that data? These are all things that I need to think about when trading. What's going to give me the best possible trade? It'll be something that's not priced in. It'll be a shock to the market. Now, technically, it's worth having a look at a few different charts here. We mentioned before that the markets that are going to be affected. So for me, if I was trading this, I'm going to have probably about 4 charts up. I'll be looking at the S&P 500 and the NASDAQ. Now, the NASDAQ is typically a more volatile market in comparison to the S&P. So for some people, they prefer that. But because they're very correlated, it can be quite useful to have them both up. Another market I would choose would be a currency pair. In this case, I probably would have the Euro USD, and I'd also look at gold as well. Now, remember, off a data release, if the dollar is weaker because it's worse than expected, for example, then gold is going to go to the upside. Whereas the dollar is stronger, gold is going to move down. It's going to come under pressure. Okay. Now, for those that are following along on the podcast, remember, as I said before, that you can click the link and go to the YouTube, but I'm going to read out some important levels anyway for you. For the S&P 500, as I mentioned, we've come under a little bit of pressure, but I'll be really, really watching, especially into the end of the week. Do we close above 4,000? If we don't, and we actually start to move lower, for me, it actually seems that the next area of big support below that is 100 points away at 3,900. The bears will be crossing their fingers watching this and watching that close on Friday at 9 p.m. UK time and the close on Wall Street, and hoping that we're below 3,900. If we turn around and finish above 4,050 for the S&P 500, well, that would be a pretty big win and something the bulls would be proud of. The NASDAQ, technically, it looks similar. Key levels to the upside around 12,200. Bulls want to see price above that, and the bears want to see price below 12,000. For the Euro USD, to the upside, I'll be keeping a very close watch on the 108 handle. That's a great line in the sand for the bulls and bears to battle it out. I would be bullish above, and as long as it stays below, we could look for price to drift down to probably the 105 handle as well, which would be a pretty big move, it has to be said. Gold holding strong around 1,800. excuse me. So I'd be keeping a watch on that, hoping if I was a bull that it holds, and also hoping if I was a bear that it breaks. To the upside, 1900 is a key level as well. As with anything, you do not have to trade these events. There are always going to be opportunities in markets. Okay. It just means, you know, as a trader, you want to be as prepared as possible that if something happens, you're already ready to go. And this is why we do these trader talks. So do remember, if there are any other events you want us to cover, let us know. Now, moving on to the factors we're going to want to consider here. Okay, so the PCE inflation usually runs a little bit below CPI. So we need to just bear in mind that's expected to happen. Now, one thing as well I mentioned before is the CPI for the S&P 500 anyway has moved it over the last 12 months, price swing wise, 1.9%. It's very volatile. But this is the Fed's favorite inflation gauge. They look at this. This will influence rate decisions. So the market is likely to move. But remember, we've already had an indication of how it's going to come out because of that previous CPI data. So in the follow through from this, let's keep an eye on those rate expectations, see how they change. Was there any reason that this PCE data was better or worse? Has there been any comments from central bank speakers? And also do remember, this data release is out on a Friday. It's the last trading day of the week. You know, are people going to want to be holding risk over the weekend? Always something to consider. In summary, to wrap it up, as always, be wary of the initial market reaction. Algos are going to jump in straight away. We're preparing you as much as possible so you can say, okay, well, if this happens, I might want to take a trade if it's wildly out of line. And then I could look to ride a long or short position up to the next area of support or resistance. Do take time to take in all the information, understand what kind of correlation we're at here. Is there going to be a monetary policy correlation at the back end of Friday's trading rather than a risk on, risk off correlation? Know what market participants are focusing on. As I said, it's inflation, inflation, inflation at the moment. And also trade what you see, not what you think, if you are going to trade at all. That's my favorite trading saying of all time, by the way. I'm sure many people have heard me say that before. We're going to wrap it there for today. I hope you all found that useful. As I said before, remember to like, share, subscribe, and let me know if there is anything in particular you want me to cover. Until next time, trade safely.